Hi everyone again. We're definitely underway this time, and thank you so much for your patience. Okay, before we start, as usual, we do have to start with a disclaimer. As you know, this is it can be a very risky market, and especially you have to approach it on the understanding that you not that you can lose money, but you actually will lose money. Losing is something that we have to get to grips with, as it were, in order to be successful. But please don't ever think of using money that you cannot afford to lose, money that is dedicated to everyday expenses and what you need to lead your life. Right, I just want to stop there. As I said, thank you for your patience. As always, David is with me. He's sitting over the other side of the desk. And for those of you, if this is your first time with us, again, thank you for joining us. I can see we've got some of our quantum customers in the room, and we've also got some of you who are on the Forex program. Wherever you are in the world, thank you for coming along and spending some time with us so we can have a look at the markets, even if they are a little bit flat today. They don't stay flat forever. Right, if it is your first time, as I said, I run this with my husband, David. That was good timing, wasn't it? I actually did it with the slide at the same time. I mean, I must have been practicing. And we look at this is the Forex section at the market through the prism of volume price analysis, together with our quantum trading tools. With volume price analysis, I know we have visitors to the webinars who've simply bought the books that are on Amazon that explain the methodology. And with the Forex market, they're also the books about the related markets, how the whole ecosystem of the Forex world works, as it were. Yes, we use technical analysis. Yes, we use indicators, our own proprietary ones and some standard ones, but we also have a look. We also need to be aware of the fundamental landscape and what is happening in related markets, because everything is interconnected. The Forex sits at the middle. We have bonds, equities, and commodities. And so we have to kind of do sort of cross-market analysis to get a feel for what sentiment is. Is it risk on? Is it risk off? And, depending on which it is, some currency and currency pairs will move more strongly than the other. Now, in this session, we are using the Ninja Trader platform with the, as I said, with the specific Forex tools. The tools that are specific to Forex are actually part of what we call our currency dashboard, but we have other tools as well to help us with entries, staying in trades, and also exiting from trades. Right, I'm going to take that off and move it over because we just want to go straight to the charts and also to pick up from where we left off this morning. If you were with us this morning, the kind of topic, what we were looking at was timing and time. One of the concepts in volume price analysis is the understanding of time in the use of multiple time frames, and how you must, you don't just focus your attention on one chart. You have to look at either at a faster chart and a slower chart, sort of what we call a benchmark chart, and also that timing. Because you will read a lot of commentators and maybe other educators saying, "Oh, you can't time the markets. It's just not possible." Well, you may not be able to have pinpoint entries and exits, but everybody times the market. You have to. Otherwise, when do you know when to get in or not? So what we've developed with the tools, particularly with the Forex specific ones, and if we look at, say, the currency strength indicator, which is where we always start, this is, as well as telling us what is overbought, oversold, it is also, if you like, and to help us with our timing. If something is reaching a very, very overextended phase in the price action, well, is it time for that particular currency to roll over? And then what we have to do is we have to look at, say, well, in which pairs are we seeing the strongest moves? And we were looking this morning at the euro pound. The fundamental news came in. if you were around for the European Open, you will have known, or you will certainly have read by now, that this was the piece of fundamental news that has that caused the volatility. The German factory orders coming in at minus 4.2, way under the forecast, and certainly worse than the previous print of minus 2.1. That tells us an awful lot of what the situation is in Germany and in the Eurozone generally. Now, what we also mentioned this morning is this piece of fundamental news you can see here is classified as actually quite a minor piece of news, because it's yellow, as you know, for its factory. Red is high impact, and of course tomorrow we have NFP. Then you have orange, which is sort of medium, if you like, and this is the lowest one, that is, you know, the least likely to cause you know, a big reaction. But that's a very simplistic way of looking at fundamental news, because fundamental news also operates in its own universe, as it were. It is also influenced, if you like. The impact also depends on when that piece of news where that piece of news comes in the economic, political, and business cycle. And given the way things are at the moment, with Brexit and the global economy, this item of news is going to have an awful lot of impact, even though it is only shown as having, is only classified as a minor release, as it were. So this market is not straightforward. It's not just, oh, well, get in here, get out there. There's all sorts of other factors that you have to consider. Everything is covered in the books that are on Amazon, and also covered in great details in our Forex program. As I said, and with timing, of course, we also have to consider the time zones. We're now coming into the New York session. Liquidity is this is the deepest liquidity for the Forex market. We have three sets of traders. We have Europe, London, and of course we have the North American traders. So, you know, in theory, there's lots of participation, lots of activity, and also the sentiment that, you know, was prevalent this morning with London and Europe may now shift because of the news that is going to, the releases that are going to come up later on today. But in fact, looking at the calendar, we've got the IV, the IV PMI from Canada, and the Canadian dollar was one that we looked at because this morning it was very oversold, and in fact it has been bought during the morning. So, as I said, time frames, time zones, timing, indicators to help you get in and then get out when the time is right to get in. That is all factors that you have to consider. So I'm going to stop there. I'm just going to pass over to David, and then we'll see what we can pick out of these the sort of very flat market that we are in at the moment.
Thanks, darling, and a very warm welcome from me. And just to reiterate, if this is your first time of joining us, very warm welcome. And I hope the weather's a bit better than it is here, because it's miserable. So I hope it's warmer where you are. Good to have you here, and also welcome to all the regulars who come along, who I can see. Some of the names I recognise there, so a very warm welcome to you too. If you have any questions, please just drop them in the chat box. Happy to answer them there. If they're longer questions requiring more detailed answer, then we will answer them on air for you. As Anna said, we're on NinjaTrader. I'm on NinjaTrader 8. Anna's on NinjaTrader 7. We'll flip-flop between the two screens. It's been pretty tough this morning. That's not to say there aren't trades around. One of the ones, if you've got your charts up, which I'm sure you have, if you check out New Zealand yen, certainly one that's been moving. There's been moves in the Canadian dollar as well. But it's really a question of digging around. And actually what it forces you to do when markets are like this, where the vast bulk of the Forex world is meandering, it really does force you to go and dig out those trades which are decent opportunities. And it also forces you to go and look at all the related markets, as Anna said. You know, check out what is going on the indices. What is sentiment? What is the sentiment in indices right now? How is that reflected in the yen? Check out the currency indices, the yen, the euro, and the dollar. I've got those up here as well. You can see there, bottom left on Anna's screen, you can see the yen index there is ticking up. There's some, I wouldn't say it's strong yen buying, but there is certainly, sorry, I just moved my chat box out of the way. There is certainly yen buying coming into the market. Whether that continues or not, it's a question of looking at the indices as well, running in parallel with Forex, and just seeing how that sentiment is unfolding in the market. And of course, a lot of that will be driven by fundamentals. Obviously, volume plays a key part. I'm sure Donald, if he gets on his Twitter feed, will impact the markets as he usually does. There's a whole raft of things going on, and I think if someone commented on Forex Live, has no one told the market that actually it's NFP tomorrow? Well, that's as maybe. We have to trade what we're dealing with, and that's what we're dealing with right now. The markets are not roaring. They're flip-flopping around. You've got to be relatively light on your feet. You can't hang around in here too long. It's take what you can and get on and get into the next one. I'm just going to pass back to Anna.
Right, I've actually got cable up at the moment, despite what the additional volatility that will inevitably hit sterling because of Brexit, but it's all kind of calmed down a little bit. And I've got here the 8-hour chart, because going back to time, we are with the Forex, in the Forex world, in the Forex cycle, the 24-hour cycle, it really does break up into 3 8-hour sessions fairly clearly. I'm just going to check, because we've had because we're on British summertime now. If I just put the data box up on here, let me have a look. This will tell me. Okay, now this candle here is actually going to close off at 2 o'clock, so we've still got another hour. This really represents the price action that we've seen since London, since Europe started, basically. So this is really the candle that has captured the price action that we've seen in Europe and London. And the nice thing about the 8-hour chart is that it does give you this view of how sentiment just can shift across the time zone. So we've got another hour before New York enters. What we can see on the CSI is we can see the pound, as I said, we've had the sharp fall in the pound. This is only the 10-minute chart, had an effort to rise, then it's sort of carrying on lower. I'm just going to highlight it on the matrix to see where all that selling, where the strongest selling has been. And we've got it against, as I said, the Canadian was being pretty bought quite not heavily, but it was some buying in the Canadian this morning. And we can see here, in fact, that of the pairs of the sterling pairs on the CSI on this time frame and on the matrix, you can see the pound CAD. That is probably the most selling of the pound against the Canadian. The next one is actually cable, which is the one I'm looking at the moment. And again, with timing, we know we've got New York coming up. We can see these currencies overextended, and we just don't look at one time frame. I like to look at going up to, say, the 30-minute chart and just see what we can see there. And we can see here, in fact, quite nicely, we can see the pound is, it still looks quite weak. The Canadian still appears to be rising, and what that tells you, what that kind of gives you some sort of benchmark. So you can have a view that there is potentially some further selling in the pound and potentially some further buying in the Canadian. If I just pull up the pound there, let me see how they turn. And in fact, again, we've got the Canadian and cable, and we've got the dollar still rising. But we have to be conscious of the fact that we are coming up to a crossover session. So what we are seeing on the charts, we may have a knee-jerk reaction or we may not. But at least the 30-minute, it gives us, it frames the price action that we are seeing on the faster chart and compares it with what is going on in the slower time frame. Now, going right down to the fast, going the other side of the 10-minute. So let me go down to, say, the 3-minute chart here. What's happening on the 3-minute chart? Well, we can see here the the pound, there has been some buying in the pound, because obviously on the faster charts you are going to get this the overextensions of these currencies are obviously going to happen much faster. And then the decision is really, if you are, say, on the 3-minute, something on the 3-minute chart, or a non-time based chart such as Renko, the decision is always when you are seeing a counter, a move counter to the dominant sentiment in a slower time frame. The decision is always, is there going to be enough in that reversal, in that move on the faster time frame to make it worth your while to take that trade? And you also then have to try and assess what is the risk on that trade, and is it a risk not only from a monetary perspective, but also the risk on the trade. Are you simply going to get stopped out because it is just a minor correction before the primary trend lower, if you like, is going to continue? And I've actually got the 5-minute chart here of this is cable, and if we take this as, if we go right back here from the volume point of control, where we've actually had a breakaway from the volume point of control, where we've had some corrections as well. We had a volatility candle, and inevitably with volatility the price retreats to within the spread of the candle, and there was an effort to rise. But if this is where VPA will come in and will help you to validate whether the correction you're seeing as a reaction to the price action and volatility, is it actually genuine or not. And there was not a lot of volume under that candle, a little bit more under there, but it's more of a doji candle, so there's more indecision. Volume under that wasn't fantastic, narrow spread, and in fact it carried on lower. It then had another effort to rise, and we actually have a very nice hammer candle here with even with a pivot that was fired, and again you had an effort to rise, and in fact you did have rising volume, but the candle spread under that rising volume, it really isn't, I wouldn't say it was anomalous in the sense that it was, it really sort of hit you in the face with it, but it really wasn't sufficient to carry on further. And in fact we had a bearish engulfing as the next candle, a bit more sideways, and away down we went. The trend monitor down here, what this does as well, it helps to keep you in a trade. We had some changes of color, but not to the bright blue, which is what we would expect if in fact it was a true reversal. And in fact, if I move it onto let's take it up to the 10-minute, which is possibly which is not quite so noisy. Again, we have the move away, the breakaway from the volume point of control. And if you remember, you are also looking at this with the CSI, with the other indicators, and these corrections that you have here within this time, a 10-minute time chart. This is where you will see the CSI on the faster time frame offer those potential reversals, and that's for you to decide whether there will be sufficient in these, as I said, pullbacks and reversals from the primary trend lower. Is it sufficient for you to be able to take a trade? And that is only a decision that you can make. David, I know you wanted to say something. Do you want me to, which chart do you want to see? Or can I move over to you? Because you've got Ninja as well.
Yeah, very quickly, just to...
Oh, hold on, turn myself off.
I just wanted to pop back to I think it was the 30-minute on
the CSI.
It was the matrix, particularly on the Canadian. Yeah, that was it. And you had that was it. Yeah, I just wanted to highlight this because it really is a super example of what you're seeing between the currency strength indicator and the currency, and really how that's reflected on the matrix. And the pair that caught my eye was the pound New Zealand mid-table there. You think, well, why is it mid-table? Why isn't it going anywhere? Everything else is moving. That where Anna's cursor is, it's at spot 12. So it's literally sitting in the middle there, not going anywhere. Why isn't it going anywhere? And when you look at the CSI gives you the answer, because the pound, the yellow line, and the New Zealand dollar, the grey line, they are both falling together. So you don't even need to look at a chart to understand that there is there's no momentum driving that pair. There's no differential force between a heavy buy on one side and a heavy sell on the other. So when you look at the pound in the context of the Canadian dollar or the Australian dollar or the Swiss franc, or indeed virtually all of those currencies there, they are all moving in the opposite direction to the British pound. So therefore you will see trends developing and developing strongly, and you will see them moving to the extremes on the currency matrix. And really what that tells you is that the universal aspect of pound selling is across the market, and really the only reason that the pound New Zealand is not following suit, if you will, and sitting mid-table there is purely because you've got equally strong selling of the New Zealand yen, New Zealand dollar rather. As I mentioned at the start, we're seeing that reflected. I've got the New Zealand yen up in multiple time frames, and that's still moving quite nicely because you've got strong buying of the yen at the top, the magenta line on the CSI, and you've got equally strong selling of the New Zealand dollar, the grey line down there at the bottom, which is falling pretty heavily. So I just wanted to highlight that. It really is, it just rams home the point that using the indicators, the CSI, the matrix, the array, they give you all this information to help you in cherry picking those trades which are going to give you the best opportunities and those which are going to be a bit of a struggle. And it's really just a nice example. Yeah, do you want to switch over to mine?
I will. I'm just going to show something.
Okay, I just want to switch off for a moment.
On NinjaTrader, with if you've got MT5, you can toggle the lines on and off so you can see more clearly the currencies. If you're trading just a particular pair, you can just have a pair of lines up on the indicator. Or if you want to, say maybe just look at the pound, say, against the Canadian and perhaps against the New Zealand, as David was saying. What you have to do is you go into indicators and you literally you toggle them on and off. So I'm going to keep the Canadian. I'm just going to take the Swiss off. I'm going to take the Euro off. It's much quicker on the MetaQuotes platform. But so this one is a little bit tedious. So I just want to make sure I've got the right one. Here we are, New Zealand, and I'll keep that one there. So you just hit OK, and there we are. And then that takes the lines. And this is what David was highlighting. So we're seeing this very strong move in the British pound moving lower, but it's certainly not reflected at the moment against the New Zealand, because that's also falling very heavily as well. So if I just highlight the pound again, and this is what the matrix does. And the matrix again is another, if you want to use as a potential timing mechanism, in the sense that you're waiting for something to be at an extreme for a reversal. Well, this is another way that you can use this indicator. And to be honest, all traders and investors, we're all reversal traders and investors. We don't buy at the top, we don't sell at the bottom. We wait for the on investing. Obviously, if you're a short seller, you wait for the you wait to sell when you're at a top. But investors always they buy for value. Trading forex is it is the perfect trader's market, because you have no bias to whether something is being bought or sold. You don't care. You're not looking at it from a value perspective. Now, you could have a bias as a trader because you like trading the short side, and that's certainly David has that characteristic very strongly. And the only reason is because things fall faster than they rise. It's just the way that instruments tend to grind higher, and that doesn't matter whether it's a forex pair, a commodity, or a stock. But boy, when something falls, it falls very, very quickly. So if you like, in the forex, so you could have a bias as a trader that you like selling to the short side all the time, but in forex, there's no biases in the terms of value. So that's what I'm going to say. I'm just going to pass over to David. I'm going to keep an eye on the on sterling and on cable in particular. But as I said, we've just coming up to well, not quite, but we've got another 45 minutes or so before that candle breaks out. Flicks over the 8-hour candle, and here it was on the 30-minute chart. This is what we are seeing. We are seeing these efforts to rise. These wicks to the tops of these candles are on, certainly on this on this time frame, this is this is weakness. But in that move higher in that candle, there could have been a scalping opportunity using a tick chart, using a Renko. You're only talking about a handful of pips, but as long as you're aware of what you're doing, could you have timed a potential trade in there? It depends. You'd have to look at what the, how many pips that wick was offering at the time, as I said, on the faster time frame. And we have the same thing here. Now, on this time frame, these candles are, certainly from a VPA perspective, are potential re-entry signals, because this is a trend lower. It's not a very volatile trend lower, but it's certainly a trend lower. And where is it heading? This is where support and resistance comes in. We're looking at 31.25. So it's putting together concepts from VPA, price action concepts, looking at reversals, using the indicators to help us with timing, understanding and putting it all together, so you feel relaxed about taking an entry, taking a trade, and understanding what you are seeing on the charts in multiple time frames. Right? Yeah. Oh, I'll turn myself off.
Sorry, Lang. Just to just stay on that chart for a moment, just to reinforce what Anna was saying. Those re-entry candles are, I cannot tell you how powerful they are, particularly in the downtrend. If you're a short trader bias, which I most certainly am, I'm very conscious of it. And I know other traders are too, purely because the market moves faster to the downside and it generally does to the upside. Those re-entry candles are always the ones I'll keep an eye out for. If I've missed something, maybe I wasn't at my desk or whatever, and there's a price waterfall in play, what I'm looking for is a congestion phase following a bunch of candles to the downside. Then I'm looking for the rally. I'm looking for weakness in the rally. And then I'm looking for real weakness with one of these candles where the market's tried to rally, it falls back exhausted, has a nice wick to the top. That is my point of getting into that position. That's an entry position when, half the move or a third of the move or 2/3 of the move has gone. But ideally, from a personal perspective, I always like to look at reversals. But if you're a trend trader and you're more comfortable getting into the trend, then you've got to pick out these opportunities. It's not chasing price, it's looking for the opportunity, which is confirming to you that the trend remains intact. In other words, the sentiment, whether it be weak or strong, remains in play for the time being. And those are the re-entry candles that you have to dig out, but they're fantastic in the bearish trends. They really are signals of further weakness to come. And as Anna said, looking at that particular chart and opportunities it's going to offer, once we get down to that price support level, it's not moving particularly quickly, but once it gets down to that platform there, that may or may not provide support. If it provides support and everything else lines up, it may well be an opportunity for a short-term reversal trade to the upside. If that level is breached, then it's adding further downwards pressure to an already bearish trend, which is also reinforced with the trend monitor at the bottom there, which you can see is bright red. That's transitioned. In fact, on this occasion, it went straight through from blue to red. There was no transitional color at all. It's just gone from bullish straight into bearish and confirming the bearish trend there. And when you look at that chart, you'd have to go up to a slower time frame to look at the volume profiles associated down the various time frame or down the various price levels. But as we come to the end of that chart, you can see the volume is falling away. So from a volume perspective, there's very little in the way of volume to offer provide support rather to the move. So you're really looking at the price-based level there. And if it breaks through there, it's pretty much free fall in terms of potential price support between there and right the way down to 30.20. So, you're looking at maybe 100 pips. Now, in the normal course of events, you would look at that as I was going to use the word straightforward, a relatively straightforward trading opportunity, because you've got an absolute ton of resistance overhead and you've got very little in the way of potential support below. So it looks an ideal opportunity. The caveat, of course, is this is the pound, and someone could come out and say something in the next 5 minutes and the whole thing just is turned upside down. So you've always got to trade with that in the back of your mind with anything to do with the pound right now. I'd like to be that way for the next few months as well. But if this was a just one of the regular pairs, an Aussie or a Euro, whatever it may be, when you're looking at that chart, that is telling me loud and clear this is an opportunity. What's also interesting about it is when you scan your eye over to the left-hand side, we had all that volatility. There we go. On that candle, we had a big up candle, down candle there. We're still trading in that range pretty much. We haven't been able to break that range free of that region. So it's looking fairly weak, but who knows? With Brexit, anything could happen. It could rocket up on a whim. So just wanted to add that to that particular chart because it's an interesting one. I'm just going to switch off for a moment and we'll probably change screens. Bear with us a moment.
Yes, and again, this very, very strong platform that we see here. And if I could just, it's a very interesting question from Vince actually, looking at no, I just said that they're in congestion, and that is let me just put everything back again, because otherwise it's there we are.
Do you want to switch off for a moment?
Yeah, I'll just take that off.
Just I can see your question there, Vince, which, as Anna says, great question. I'll put my 2 pence in. It is very much, you've really answered the question yourself, but yes, that's really what it's about. It goes back to the whole issue that we have to deal with as traders, that what a scalping trader will see on a 5-minute time frame, which may well be a great opportunity for them, what you might see on a 4-hour time frame is just a minor blip in the longer term trend. And that's what we're always having to deal with. You're always having to deal with information that might well be in direct opposition to the view you have on a slower time frame. It may confirm what you believe on your faster time frame, but it may not. And that is what you have to deal with. So as we always say, the analogy I've always used many times before is a blinkered racehorse, is that they are blinkered for one reason, because they have to be focused on the finishing line. And in a way, it's kind of what you have to do in trading. You've got to focus on whatever it is you're doing. You can be a scalping trader, you can be a longer term swing or trend trader across the piece. It doesn't matter. But whatever you're doing in that particular trade, you've got to say, right, okay, this is a scalping opportunity. I know what I'm doing. I know I'm trading against, say I'm bearish and the longer term trend is bullish. That's fine. As long as you understand that, absolutely no problem. But that's what you're dealing with the whole time, because this market, it's all about wheels within wheels. And what you're seeing on a 5-minute time frame or a 15-minute time frame in terms of a reversal from the oversold to overbought on an hourly or a 4-hourly or on a daily chart is nothing more than a minor pause point and a minor reversal or a minor pullback. That's what we have to deal with all the time, which is why it's so important to try to isolate out that area of time that you're trading in. If it doesn't go against you, fine, on to the next one, and not try and then look at a much slower time frame and say, well, actually, do you know what? I think I might be all right. You're dealing with that all the time. But yes, precisely that's what it does. When you look at the CSI and slower time frames, it will tell you that market's in congestion or whatever it may be, or it's roaring. It gives you so much information. It tells you about the strength of currency moves, the steepness of the lines will tell you that. It'll tell you which currencies are moving together and therefore they're not worth investigating. It'll tell you which currencies are moving in opposition, which therefore are worth investigating. And it'll also tell you which currencies are moving sideways, and it'll tell you that particular currency is flat in that particular time frame.
And finally, as I said in my answer to Vince, essentially what you then need to go and have a look is the actual charts. If the lines are on, say, something like the 4-hour chart, they're just not going anywhere. There's no clear divergence at the moment. We can see, well, we've got the yen, which looks to be turned up quite strongly. We can see the Canadian, but when they have this, when they're all intertwined in the center here, or more particularly, they are moving in the same direction. Yes, you have a congestion phase. Everything is range bound. But as I said all the time, what you see on a slower chart. And if it's a definitive range, within that range there will be reversal opportunities on the much faster time frame charts. And what the slower time frame charts, if they are moving in congestion, they will give you your support and resistance. They will give you those levels that, if they are fairly strong, they are very likely to hold when the move in the faster time frame has approached that level. And they will be the support and resistance line will be due to accumulation. This is an accumulation and distribution indicator. On MT4, MT5, it's based on price. It's just the number of times that level is hit, and the lines get thicker rather than hatched. On Ninja, they get thicker, and there's also little values to the side there. You also have to look at where the volume point of control is, where you have the greatest concentration of volume, transacted volume. That is also giving you support and resistance through the prism of price, volume and time. And I did say last time we would actually look at support and resistance in much more detail, and I haven't had time to look at it this week, but possibly do it next week. So that's what I'm going to pass over to David. I'm going to keep an eye on, as I said, on cable. This is clearly the level that it has to breach if it is going to go lower. I'm just going to move it up to the hour, see if there's anything interesting that I can see here. Again, what we're seeing is this move away from the VPOC at about 31.70. It was certainly got a reasonable amount of volume under these candles, but as I said, we just have to wait and see. We've got, as I said, with New York coming, we'll see what happens. But obviously, the dollar's going to be in focus, as is the Canadian dollar as well.
Just switch screens, and hopefully you can see my NinjaTrader 8 come up now. Slightly different layout to Anna's. But I've got multiple. Sorry? I can't see it. Oh, you can't see it? I don't know what's going on with technology. Anna can't see my screens. Hopefully you can. You should be able to see 6 charts. I've actually got the 2-minute top left. I've changed that down a little bit. 5-minute, 10-minute. And then I've got the 30-minute, and I've got the Renko here running, and I've got the daily chart for the New Zealand yen, which is ticking along. It's still bearish. As you can see, we've had the trend monitor, which has remained bright red throughout, onto 5, onto 10, down onto 30. So it's really just confirming all of that. And just for context, that's where we are in terms of the daily chart. And I actually flicked up the Aussie yen this morning, and I'm sure you can check it out for yourselves, but that has been trading in, if you think this is a narrow range, check out the Aussie yen on the daily chart. Ever since the turn of the year, it's been trading in something like 150 pip range. Now, at some point, that is going to break, and almost certainly it'll be reflected across the yen pairs, because they're all starting to develop this particular channel of price action. This much is pretty similar. This is what you'll see on the Aussie yen, something like this, but it actually extends almost right over here somewhere. But as you can see, we've got very, very well defined levels of price resistance here at 76.50, and down below, just above 75, we've got a very strong platform in here. We're trading around the volume point of control, which is the yellow line here. So for a patient breakaway trader, this has all sorts of opportunities. When I say patient, given that this is sort of middle of February over here, we've been waiting several weeks here. But then if you're going to trade this as a breakaway, then you're not going to be looking at this as a 5-minute perspective. You're going to be looking at it as a daily perspective, and probably holding it for days, if not weeks, once it starts to move, because move it will. Currency pairs and currencies can only stay range bound or in congestion phases or overbought or oversold for certain periods. Now, that can be a long time, but once they start to move, they will move. And it's very much the coiled spring effect. It is Wyckoff's second law, as Anna mentioned this morning. It's all about cause and effect. The longer, in other words, the longer something is developing, then the greater should be the reaction to that phase of development. So time is all important here. But again, it's relative. A long period of time on a 5-minute chart might be a few hours, 2-3 hours. A long time on an hourly chart might be, let's say, 2 or 3 days, and so on and so forth. So time is always relative, but in the context of the daily chart, if you're seeing this sort of price action, then you would expect any meaningful move away from this phase of price action supported by volume, then that is going to confirm that we have a decent trend developing and underway. It will happen. I can't tell you when it's going to happen, but I can tell you it will happen. And in a way, it also highlights the issue of when you are trading this particular approach, when you're looking for breakaways, is to define those levels which set your comfort parameters, if you will. And again, it's a nice example. To the upside, if you were trading this, let's say it breaks down to the short side. If it breaks to the short side and gets through this level, the first thing that is an absolute perfect place for your stop loss is above here. I mean, you've got the most enormous amount of density, and it's not a huge range either. So you're only talking about 100 pips odd here. So to have a stop loss, you'd be looking at that anyway for a daily trade at the very least, I would suggest. So to have your stop loss up here is the absolute perfect place to place it. And you're then looking at a massive barrier, a price barrier to prevent any, protect you in the event of any short-term reversal. So once the price breaks below and then often retraces and tests that region again before it goes down yet further, then you've got all this barrier, this naturally created barrier by the market to protect you and your stop loss. So it's just a great place to put it. Equally, if the market breaks to the upside, you've got this wonderful level down here and exactly the same principle, stop loss going in under here somewhere, and you've got all this stuff in here to protect you in the event of a pullback against you. So again, it's just a really nice example of lots of different things. Just drop that down again. It also gives you context of where you are in the day, even as an intraday trader, what is going on, and the context of what you're trying to do against the daily perspective of what is going on. Let's just head down to the 30-minute. There we go. You can see there was a slight transition in the trend monitor. It went to darker red there as we had this minor rally higher, but then it just picked up again and rolled over. And again, it's a facet of this. We mentioned it this morning. One of the hardest things to do in trading is to hold a position once it begins to develop. And these are always the points where you get these rallies against. You're thinking, I had this nice bit of money in here. We had this fall, and then it started to rally, and now it's come back against me. Is it going to go all the way back up? I'm going to lose everything. The trend monitor is a great indicator just to calm those emotional points in trading, and those are the ones that will hit the hardest because it goes to the heart of the trading mechanics, the mathematics of trading, which is holding these positions to maximize profit. But it also helps you to manage that emotion where you're losing something that you thought you had. You've got 10, 15, 20, 30, 40 pips in the bag, and then suddenly it goes down to 38, and then 35, 33, and then back to 29. You think, I've got to close out. And you close out, and then it stops, and it goes in your direction again. And before you know where you are, the market's picking up momentum, and you're ruining the fact because you're looking at potentially 50, 60, 70, 80 pips that you could have held, and you've lost because you've given them up. So this is not easy stuff to deal with, and the trend monitor, that's why we developed it, to really take a longer term look back against the trend and whether it is actually a true change in trend or whether it is just simply a pause point and a reversal in the longer term trend direction, the primary trend, if you will. You can see it down here. We've got it operating. I've got the trend dots on here as well. They're great. They work really good with the Renko. And to set the Renko up, to use it in combination with the time-based charts, it delivers the optimal setting. It works exactly the same way on MT4 and MT5. What we've delivered is something that actually calculates the optimal setting. So if I go up here and select 1 minute, for example, click on that, down the bottom a box will appear and it'll say click the box here for your optimal. Here we go. Click here to open your Renko chart, and it's coming up at 19, which means it's 1.9 pips. You click on that. That is your optimal setting. It's loading that up right now. That is the optimal setting for the New Zealand yen right at this precise moment in the market, because that will change the whole time. Markets speed up and slow down, and it's one of the facets of using non-time-based charts, whether they're Renko or tick charts. They are independent of time, and therefore you see raw momentum. You see the speed of the market delivered on the chart itself. When the market's very fast moving, these bricks will be created very, very quickly. You don't see that on a time-based chart, but you do on a non-time-based chart, and they're just great to use in combination with the time-based charts, which can be a little bit noisy. Obviously, doesn't allow you to do VPA analysis, but you can do the VPA analysis on the time-based charts, have the Renko running alongside, have the Renko as your entry, or have the Renko as your helping you to stay in mechanism, if you will. It works in lots and lots of different ways. Let's just go back and see what's happening on the indices. Let's have a quick look down there. We've got some pretty strong buying on the dollar, which should be helping on cable that Anna was looking at earlier on, if the pound is still selling off. Or is that flatlined? It's stopped a bit. Okay. We've got some decent selling on cable, on pound rather, on the dollar. This is the US dollar on 5 minutes. So, there's a decent trend developing. You'd be hunting out other pairs, maybe stay away from the pound, look for something else that may be moving more strongly. This is the yen on 5. There was some decent buying. It's gone back into its shell now, and that's part of the reason that on the New Zealand yen you're now seeing congestion, because that buying of the yen, which was helping to drive that in opposition to selling of the New Zealand dollar, has now come to a pause point. So part of that equation is waterlogged, if you will, and maybe even reversing off that. And of course, part of that will be to do with market sentiment. I'm going to have a look at the indices in a moment. And this is over on the euro. Pretty choppy. That's what we saw this morning. This was 7 o'clock our time. This was off the fundamental news, which was not great news for manufacturing. We had a pretty strong sell-off into the time we were on air at any rate, and now it's been sort of trading sideways pretty much for the rest of the time. No great trend on that, certainly on the faster time frames. Let's just go back to, let's have a quick look at the CSI and see where we are. This is on 5, and I've got 15 alongside. Where are we? Let's see. The New Zealand dollar is still, as you can see, it's still flatlined. It's very oversold at the moment. It's pretty much oversold on 15. The question you've got to ask yourself now is, if you're looking to get into that particular trade, this is the yen at the top. That's the strong sonnet buying we're seeing in the US dollar. That'll be reflected on 5 as well. That's on 15. Strong buying there. That's the New Zealand, that's the Japanese yen, the magenta. And that's the reason that we're seeing, certainly in terms of cable at any rate. So you've got strong buying of the dollar here, but as you can see here, the pound, that's been very oversold and is now starting to click up on 15. And on 5, it's about halfway up the chart. So again, it's back to, why is this pair not going anywhere? We've got strong buying of the dollar, but we've got equally strong buying of the pound. So there isn't a differential force driving that pair. In other words, we haven't got strong buying and strong selling on the opposite sides of the currency pair. There will be better pairs to look at. Go and look at the Aussie, for example, selling off very strongly right now, buying strongly of the dollar. Let's see what it's doing on 15. Yeah, it's flicked over. Might be one to look at. That's what you're doing the whole time. Just going to switch off.
I'm just going to add to David. I was looking at the CSI, at my CSI on the I was looking at the 30-minute chart actually, and where you can see the very strong buying of the dollar is continuing and going over the way past the. We put these lines on the CSI. We put 18 and 20. They don't have any meaning per se, but it's just to, just to give some framework to the overbought and oversold. So once it gets over the 80, it's, it is getting very, very overextended, but the value itself, it doesn't mean anything. And by the way, it can stay up there an awful lot longer than we think, and perhaps it can dip down and then go back up again. But as David said, there is buying of the pound, and certainly on the faster time frames, and it's also turned up on the 30-minute. But it's because you have an asymmetric force in this pair, where the if you like, it is the dollar that is keeping the pound depressed. And of the pound pairs on the 30-minute matrix, it is the weakest, and the strongest on the pound is actually against the New Zealand, isn't it? We've got the pound New Zealand. So this is how you look at the CSI, and it says it can give you so much information. By interpreting what you see on the CSI, you pretty much know what is happening on the chart. Now, what will happen is, with staying with cable, is at some point that dollar is going to reverse. It's becoming more and more overextended. We're waiting 15 minutes. We've got the US market 2 o'clock, David. 2 o'clock.
Yeah, it's the Ivy, I think.
It's waiting for the Ivy as well. The US market's 2:30, isn't it? 2:30. It's 2:30. But I'm waiting. Sorry, I was looking at my 8-hour candle on cable. Now, at some point, the dollar is going to reverse off the overbought state that it is at the moment. Now, that will be sufficient to drive the cable higher, but at the moment it is being, if you like, contained by the strength of the dollar. It's not moving because the buying of the pound in that pair is not sufficient to actually reverse it. Does that make sense? Is that okay, David? Yeah, fine. That's it. Do you want to, if you've got anything?
Just going to switch screens again. Bear with us.
Oh, fine. Okay. Right. Again, this is what I was trying to say on the 30-minute CSI and the 30-minute matrix. You've got the strong buying of the dollar. You can see the pound has already some buying of the pound coming in here, and of the pound pairs that we can see here, there it is. That's the weakest at the moment. But it's, it looks like the dollar may actually be coming to a turn itself. Let's go down to, say, the 5-minute chart, see what we can see there. Yeah, and here we've got again the dollar very overextended at the top. This is rising, and let's pull it up here as well. There we are. It's sort of moved. It's still, of the pound pairs, it is still certainly the weakest. Sort of the euro pound is pretty close to it in terms of weakness for the sterling pairs, right? And going back to the chart that we were looking at, we've got this support platform here. I think it was the 30-minute chart, wasn't it?
Yeah.
Yeah, there it is. And we said this is where it's aiming for. This is a very, very strong platform of support. And if you have these indicators, it's really interesting to go and have a look at the, when you see a strong level that you have here on maybe something like a 30-minute chart, and as the price approaches it, then look at the, say, a CSI on a faster time frame, and more often than not, in fact, I think it's almost guaranteed, that is when you will see the reversal in the faster time frame. So, time using multiple time frames. I think we had an email from someone. What did they want to know? They said, "Oh, all in, your indicators are lagged." All indicators are lagged. Apart from the volume, the volatility, the price volume, and our volatility indicator, because that triggers in real time. So the trick is, and that's not just with proprietary indicators, but with standard indicators, is by running multiple time frames. So if your time frame where you like to take a trade is, say, the 5-minute chart, then you should have a faster time frame with your indicators, because they will move before the ones in your actual time frame. The combination of time frame is really very much up to you. So that's how we're going to leave cable. Any questions? No, I don't think. I think we've done all the questions very quickly. We've run over slightly over time, but then we did start late. Right, very quickly. What's interesting, I think that some of you may have seen this already, because I showed it a couple of weeks ago. It's a very interesting chart that you can find on my FX book, and it sort of plots the liquidity that is flowing into the market. And we can see here at this point here at 13.15, the liquidity was very low, 37.46, and that also helps to explain, if there's no participation, there's no liquidity, it has twofold effect. It can make things very flat. What can also happen is that when you have low liquidity and something hits the market, a piece of news, that's when you get a kind of overreaction in the price action. And again, here we're only really 125.25% this morning, 233. You get a feel for how many people are actually taking part in this market. And if it's flat, it doesn't mean there's an awful lot. Another indication of what mood, not so much mood the market is in, but basically is everybody engaged, the level of engagement in this market, which again, and on the CSI, it's reflected on the charts or by congestion. And it's a phase of price action that really a lot of traders do not like. So on that note, very, very quickly, just go back to quantum trading. The indicators, as I said, that David and I have developed, and they are from quantumtrading.com, where you can find all the details. These are the ones for NinjaTrader. The TradingView ones, unfortunately, we haven't been able to port all the indicators over to TradingView because of the problem with the, not a problem, but the script that is offered by TradingView. I've lost my connection. Can anyone hear? Can you hear me? Can you actually hear me? Oh, this is quite fortuitous, because for some reason we seem to be having an internet problem. Hopefully you guys can hear me as well. Can someone just put hopefully a yes? Okay, brilliant. Thank you, Ashley. That's fantastic. So very, very quickly, and NinjaTrader are here, TradingView. Underneath here are the individual indicators, which you can just click on. This is the accumulation distribution for NinjaTrader. We just click on that. Hopefully it will work. The internet is a bit flaky at the moment. I think it was my Ninja that was coming up. There we are. Yeah. We're back again. Yeah, Ninja. There we are. And what we have here, you'll have the pages, explanation, how we develop, how we've developed the indicator, and how you can use it in your trading. And just very quickly, you heard me mention the education program that David and I have put together, and that is from quantumtradingeducation.com. Much better if I go to the site. There we are. This is the program with all the modules, but it does include the full package of indicators. You get that if you invest in a package. Those of you who have already will know that whenever we develop a new indicator, it is automatically added to your package. And certainly it's the pound index, which will now be added to the MetaTrader and for NinjaTrader. Is there anything else you want to say, David? No. That was it. Brilliant. Thank you so much for coming along today. We are back later. I'm not sure there's going to be an awful lot to see in the indices. As I said, markets are very flat at the moment, but no matter. We have to take what the market cares to deliver on any given day. If you're coming along later, wonderful. We will see you then. Otherwise, we will be back next week. Take care. Thank you.